in your WIP process. I know that the end of the month is a big deal to a lot of people, and it's constant. How much do I have to take out of WIP and put in COGS and journal entries and all that kind of thing? So what we did is Chris actually came up with this. When did you come up with it, Chris?
About 2 months ago.
So about 2 months ago, Chris figured out that eManage is super, super flexible when it comes to QuickBooks, and she could turn her COGS accounts into receivable accounts and basically do kind of journal. Okay, that's not going to work. Whose phone's ringing? All right. Anyway, she figured out that she could make her COGS accounts receivable accounts and then use them on when she does her customer invoices to back out her WIP and put it into COGS at the same time. So when Chris told me that, it took a couple hours of going back and forth before I actually understood it enough to say, well, we could automate this process. So then we spent another 35 minutes on the phone arguing back and forth about how to do the numbers. But we actually came out, we did everything in Excel, we did a whole bunch of different numbers. What the software does is it will take, if you're a progress billing kind of company, you could do a progress billing for 30%, and it will take 30% of your WIP and convert it to COGS. If then you get more cost in that you apply to your WIP, and then you go and do another 30% progress billing, it will then take, and it takes the actual what WIP would be at 30% with the new WIP included. So, and it was a big old mess when we were going through it, 35 minutes, but we got to it, and it's perfect, and that's what we're going to demonstrate for you today. And show you how easy it is to set up. You literally can set this up. Yolanda, how long did it take you to set up your WIP and COGS accounts?
A few minutes.
A few minutes. And then you started using it, right?
Right.
Right. So this doesn't take a lot of setup. We try to keep it really, really simple for setup so you guys can just start using it. Once you set these things up, it's automatic. All you have to do is start using your WIP accounts, and you do have to have a WIP account for every COGS account. Okay, that's the only way it's going to translate over. So for every COGS account that you have, you should create a WIP account for it, and then we make a join that joins your. You have an offset COGS account for every WIP account, and you set that up in the chart account. So we'll go through that as well.
Excuse me, we lost. We were seeing your screen. Now we're back to connect to go to meeting.
Okay, do you want to try and connect again?
Okay.
Yeah, there's nothing that we did over here.
Nope, I see you just fine.
Okay. Yeah, so just connect to the meeting again.
Okay.
You might have had a hiccup. Is it snowing over there?
Oh, not in Los Angeles. Oh, we got it. Thank you.
Okay.
Well, and also if you're on a wireless, that might be the problem, that it'll drop it.
Is that Ann?
Yeah, it's Ann and Sean here.
Oh, hi. How are you?
I'm fine. How are you?
Oh, good. I didn't recognize your voice. Okay, so I'm going to go ahead and I'm going to basically kind of stay quiet as much as I can. I'm not very good at it, but I'm going to. So I'm going to mute myself, and I'm going to let Chris take over and explain why we did this, what you're going to do with it, what you can do with it, and why you should use it. And Chris, you can give a little bit of your background too. So.
Okay. For all of those people that are on the line that I haven't given demos to, I always say that I'm not a salesperson, I'm not a software person, I'm an accountant by trade, and that's why I'm, tend to jump around and just kind of stay on my field. I think that Philip had told me that there's several owners on the phone, as well as controllers, CFOs, AP clerks. I'm not sure who we have on the phone today. For the accounting people, I think you're going to totally understand this without any, kind of preview in. But for the owners that are on the phone, I just want to impress how important this is to the dealership. You know, we're all different. We all work differently. I don't know if some of you are, you know, so heavily involved in operations. You know, all you have to do is give a financial statement to the bank at the end of the year, and it shows you made 100 grand. You're fine. Boom. That's all you care about. For others of us that try to, you know, do cash flow, maybe run a tighter ship, maybe have more seasonal business, we need to look at it month to month and see what are we making month to month. You know, what are our slow months? You know, what do we, you know, basically the manufacturers are looking at us and, you know, playing with our discounts all over the place based on what numbers we're making every month. So what that means is our QuickBooks software, which we're all using, which I really love QuickBooks. I didn't use to years ago, but it's a fabulous package, and I think all of us are lucky to be on it, and that eManage integrates so well with it. But what happens in QuickBooks, since it's not a huge accounting software, is that it posts invoices according to invoice date. So what does that mean? That means that our bills to pay vendors, such as Hayworth, Trendway, our installers, all of those bills are posted per the invoice date. So if I get an invoice from Hayworth that is dated June 30th, and it's for a job that I'm going to be installing the week of July 20th, it's going to book that expense from Hayworth in June, and my revenue isn't going to be booked till July 20th because that's when I'm doing my install. And I'm pretty sure that all of us on the phone and out there are booking our revenue when we're installing the product, and we're booking our invoices when we receive the invoice. We don't really have a choice in that, because if we make our Hayworth invoice date July 20th, we're going to be 30 days off and late paying our Hayworth bill. Does that make sense to everybody? Okay, so what that can do with your financial statements, if you all even look at your financial statements, I know a lot of people that don't, is really throw it out of whack. You'll look at your June numbers and think that you lost 100 grand, and in July you think that you're just going gangbusters and making 200,000 when there's a $100,000 invoice in June that should really be in July because you installed it in July. So what comes into play is what we call WIP, which Philip was talking about. That stands for work in process. And what that means is we have expenses that we incur, whether it be from outside manufacturers, a lot of outside installers, I'm sorry, a lot of smaller new manufacturers that you may not be open with are requiring 50% down. They're requiring 50% down and the rest due before they ship to you. And obviously, if you're paying it before they ship to you, you haven't installed anything. You haven't booked any revenue from your customer. But those invoices have to be entered. Some of them actually have to be paid ahead of time. We don't want that going to our expense because we don't want to realize that expense because we haven't realized the revenue. So where are we going to put it? So what your accounting department is doing now, if they're doing it, if they're doing WIP, which they should be, is they are sticking it on your balance sheet, meaning so that it's an asset to you. So, okay, I've paid this expense to Hayworth, but I haven't received the goods, or I've paid it, or I've incurred this invoice, but I haven't really received the furniture, and I haven't delivered it, so I don't want it on my expense, okay? Hello? So the other side of what they're doing that has been taking time is they're going through and saying, okay, we did that installation July 20th for 3 weeks. So 2 weeks of it was in July, 1 week is August. And I have, $200,000 stuck in this prepaid account of manufacturer invoices I got way before we even installed it. And they're reconciling all that to make sure that the expense is booked in the same period as the revenue. Okay, based on how many transactions you guys have, and I know that most of us, have a lot of transactions going on in our dealerships, that can be very time-consuming. So what has happened is I've sat on the phone with many of your accounting staff and many of you who are the accounting staff that are here today and gone through the process of reconciling and how you can tie that into using eManage. And we came up with a solution, and what I was doing is I was doing the entry manually. What I found in eManage is that, and if you're not familiar with QuickBooks, you don't know how strict QuickBooks is you can only use certain types of accounts in certain situations, where eManage doesn't care where you use accounts. So for that reason, like Philip said, that's what he meant when he said you can book WIP accounts in receivables. What that means is when I bill my customer, I do several things. I book my income on my income statement saying, okay, I sold this furniture, delivered it, it's income to me. I also book my service income if it was delivery, book my sales tax and all that. So that's my receivable entry. So what I was doing is I was going in and saying, okay, great, I installed this $100,000 job, and I want to offset it by my bill from Trendway, my bill from OFS, and my bill from my installer. So on the receivable, I would go ahead and journalize that manually, so that when I sent it over to QuickBooks, which is my financial software, which is where I print my financials for the bank and the manufacturers and hopefully my own good that I can look at it. I hope you all are looking at your financials, but you don't have to tell me if you're not. That it's correct, that my expense is booked exactly, not only in the same period, but the same day, which really isn't necessary, but it is the same day that my receivable is going out. So everything's completely accurate. So when I was talking to Philip about this, he, of course, took it a step further, which secretly I was hoping he would, but I didn't want to ask him to, and he did. And said, wait a minute, you don't have to do that manually. I can do it automatically. And that's how this came about. So it's such an important feature because it's mindless for your accounting staff. So, and if I have accountants on the phone, you can, this doesn't apply to everybody. It's hard to do global sentences on the phone when I have so many different companies on the phone. But if your accounting staff is telling you that they're spending, and they've told me that they're spending a week, 2 weeks, I don't know how long, to do a, quote, month-end, end quote. And when they say that to me, I really don't know what they mean, because using eManage and QuickBooks, you shouldn't have any month-end. So all I can assume is that they mean this whole WIP process. Okay? So what this has done, and I'm telling you, I'm telling you here what this has done. What this has done is there is no such thing as a month-end anymore. Okay. Now, if you all are doing manual payroll, which I can't imagine anyone out there is doing manual payroll, but I think I have talked to a few people that are, you might have some manual entries on your payroll and other things. But as far as your business system and your invoices from eManage go, which is really the heart of your business, your customer bills and your manufacturer bills. That's your gross profit. There is no month end. I'm an accountant. I'm in that department, but I have to say that we are all admin costs. Our time is admin costs. We're not selling anything to the dealership. We're admin. So our time really needs to be used wisely and efficiently so that we're not dead admin cost to the company. So now let's get into the software. Does anyone have any questions to this point? I know that was a lot to digest. No?
Nope, no.
Okay. So what all this means is I have QuickBooks up, and I don't know how many. Are there people here that are not using a WIP account? I guess that's a no.
No, I mean, I think we all are.
Okay. So I have our QuickBooks open here. Just going to shoot this down here. And this chart of accounts doesn't have account numbers. I don't know if you guys use account numbers or not, but it's the chart of accounts. And you'll see that there are 2 WIP accounts here as an other current asset. So if I printed my balance sheet, the WIP accounts would be there as assets. Okay? Coinciding with that, I have my COGS account. And the way that Philip has written this is if you have different COGS accounts, which I think we all do, I think most of us, I don't know, I mean, I've seen it all over the gamut. I've seen it where people have a different COGS account per manufacturer. I know that we do it per, whether it's a government or a commercial sale. I think the majority of people would do it whether it's labor, furniture costs, I don't know, I mean, if you all are doing services, panel cleaning, reconfiguration, I'm not sure how your books are set up, and I don't even need to go that deep into it. But for every cost of goods account that you have in detail right now, you'll have a corresponding WIP account for that account. And that's how it's set up. So right now you might just have one huge WIP account, and that's also a reason why it's taking these people so long to reconcile. When you have one WIP account and you have 4 different cost of goods sold account, it can be kind of hairy. So we have our WIP accounts for furniture. We have one for software. I'm going to go ahead and create an account for labor, for install expenses.
Hey, Chris, I have a question while you're doing this.
Hey, Chris, Summer has a question.
Yep.
Oh, okay. I didn't know if you wanted me to just keep talking or not. So are you suggesting or are you saying if we have 5 cost of goods accounts, do we have to have 5 accounts, or can we have just the one big WIP account?
You have to have 5, and you'll see why.
Okay, that's fine.
And
it's the only way. It's only if we can automate the process.
Oh, that's okay.
Right.
I just wanted to be sure that's what I was hearing, but I wanted to confirm that.
Right, and the reason behind that is, as smart as eManage is, there's no way it would know that, okay, you know, I need to put $10,000 to labor and $5,000 to my furniture costs out of WIP. There's no way it would know that unless you had it in the different WIP account. So it's going to look at your WIP labor and say, okay, that cost goes into the labor cost of goods. It's going to look at your WIP furniture. Okay, that cost goes into. So that's the reason behind it, which makes complete sense.
Okay, sure. Thanks.
So I have my WIP installation. I would even I was going to group them and make an account, but I won't do that. So I have 3 WIP accounts here. I have installation, furniture, and software, which would all show up on my balance sheet. Okay? Yep. As you can see, there's nothing in there. We took everything out so that we could start fresh.
You're going to make the COGS,
right.
Okay.
Okay, so I put my 2 accounts in.
Okay, so now we're just going to import them into eManage. Use the QuickBooks integration is open. Import. I might have broken the connection here. Hold on. Oh, you know what? Hold on, Chris. It's the new, oh, you guys, this is a perfect opportunity to tell you guys that we upgraded to the latest QuickBooks integration. So when you get this update, we're going to have a new set of integration files for you to work with or to install. So that's not happening.
So Philip, should we wait to do this WIP until the update happens, is what you're saying?
Well, you can set up your WIP accounts. This actually went out, I think, in the last update. The only thing the new integration is for, I don't know if you can see in the background here, it's for batch journal costing and batch credit card entry.
Yeah.
So the new integration is for that stuff. So let me just log in here real quick and import those. No, you should not wait. It's already, you guys all got this update except for Summer, because Harrison Post isn't quite ready for the update yet.
Like, where's the love, man?
Yeah. Okay, so there we go. It's imported now, Chris. Go ahead.
Okay. So you should all be familiar, or the accounting people should all be familiar with importing the chart of accounts in eManage. I'm just going to sort it by name so I can find it real fast. So here's my new account that I set up in QuickBooks. We've always had, I'm going to move across here, we've always had these three columns: use and eManage, receivable account, and payable account. Now we have a new column that is cost of goods set offset account. So was it Summer who was asking about the different WIP accounts?
Yeah.
Okay, so this is why you see we need different accounts, because I'm going to assign each COGS account to a WIP account here.
Actually, it's the opposite. It's the opposite. You're going to assign the COGS account to the WIP account.
Right. Right. Okay, so my installation, I want to use it in eManage. I want to use it in receivable, and I'll show you how we're going to do that. I'm going to still have it as a payable, just in case I have a direct expense that I want to put in there. I just don't want to limit my option with that. And then I'm going to go down to my WIP account that I set up. It's here. And I'm going to use that in eManage. I want to use that in my receivable, and I want to use that in my payables. And then I'm going to assign it which COGS I want to use. Why is it doing that? Oh, are you doing it, or am I doing it?
No, I'm sorry. It's a we actually have to reload that just because it's got the you imported and it's got it builds the list when you open the window. So okay, here you go. So the WIP account right here, right here. Go ahead.
Okay, so I'm going to make this my COGS installation, so it knows to apply the installation in WIP to the cost of goods sold for installation and not to furniture or something else. Okay? So where are we going with all this? So I've assigned my accounts. I'm done. That's a one-time assignment. I'm done. I know some people have said, well, it's going to take us a while to set this up. We just set it up. It's done. Okay? So what I'm going to do is I'm going to go into a project in eManage. This is my backlog. I only have one sale because we're just not doing that. Yeah.
Hey, Chris, hold on one second because I logged into the QuickBooks integration. It's going to log us out of this, so I got to just log us back in.
Okay. The other really key feature as far as reconciling, because I know that, and that's why the name has changed to eManage as to eManage 1, because we really want to stress the point of you really having one software. I know it takes a while when you change softwares to wrap your head around. You're still looking at QuickBooks because that's your financial software, but actually Philip's made it so that you are really, really running everything in eManage. And for all of you owners out there, the only thing that should be done in QuickBooks, or has to be done in QuickBooks, is literally cutting checks or paying your bills electronically, which you all should be doing because that's another huge, huge waste of time as far as manually printing the checks and mailing them. It's saved us literally thousands of dollars between time, pre-printed checks, and postage. It's thousands of dollars a year savings right off the top of your profit, just from paying your bills online through your bank. And then your bank reconciliation and printing your financials. That's really all that you need to do out of QuickBooks. eManage is literally running everything else. For all of the accountants in the room, when you think of your WIP and you say, okay, I need to look at my WIP in QuickBooks because that's how I know, what's in WIP, how this works is when I go into my backlog, and I only have one job in here. You guys will have more. And if you need help, in the beginning, just if the numbers aren't matching, I would be glad to get on the phone and help you. But there's a column in the backlog called actual PO cost. Okay? And you'll see on this order it's 0. That column has been on your backlog. I don't know if you've ever looked at it or not, but it's been there. It's an existing column. What that is it's really costs that have been put on a job or invoices, bills, manufacturer, installation, vendor bills that have been put on a job, but the job has not been billed out. So in essence, that's really your WIP column, and that will always tie into your WIP balance in QuickBooks. Okay? When you're trying to do cash flow or look at your projected income coming in and you say, okay, great, we have, $2 million out there in backlog in sales. Well, the typical thing for anyone to do would be, well, our usual GP is about 20%, so really I can really only bank about 20% of that as being revenue that I can see coming in. Okay? Well, that's never correct because you have already entered manufacturer bills or maybe even prepaid bills against that revenue. So now you can look at your backlog and say, okay, I've got $286,000 in my backlog on the street right now. Okay? So instead of only 20% of that coming in, I can look over at my actual PO cost or my WIP column, and you all know that you can, just for terminology's sake, you could even change this so it if it makes more sense to you. Okay? And I can look at my WIP column and say, wait a minute, I've got $100,000 in manufacturer bills already booked in. Okay? So I can really bank 180 of that as revenue coming in. I use this for cash flow, and I don't know if a lot of people do, but that's another thing that I'd love to have a seminar on, is if you have your project statuses set up correctly, you'll know every stage that a project's in, and you can absolutely use this for your cash flow to see what's coming in. So going back to the reconciliation part of it, this WIP column here, and this is every day, every minute. It's not a matter of, oh, well, this person hasn't been doing entries. I mean, this is all automatic, okay? So this WIP column will always tie into my QuickBooks WIP accounts. There's your, your checks and balances on your journal entries. There's no reconciling. If everybody's doing everything correctly, those two should tie in. And like I said, I'll be more than happy to help you, sort it out at first. So on this project, I received an invoice. I'm going to go right into my purchase orders. If I'm going too fast or you guys want me to back up, I will. But everyone should know what I'm talking about. So here are my purchase orders on this job. Okay? And good old Han, who sends me my invoices the minute their truck tire pulls up to their loading dock, has sent me an invoice, and I want to add that in so that I make sure I pay them or take my discount from them. Let's see, what was the amount of that PO? Okay. Now when I get here, this is where you're going to see the change. Was everybody putting it into the cost of goods account here?
Yes.
Yes.
Okay. So you were putting it in the cost of goods, and it was going over to QuickBooks in the cost of goods, and then you'd have to go through at the end of the month and take it out of the cost of goods and put it into WIP and vice versa, right?
Yes. Right.
Okay, so you're not going to do that anymore. You're going to put it right into WIP. It's furniture. I don't know if we have classes. We don't have classes. Okay, good. I'm going to apply it. Okay, so what this is doing is it's putting my payable right into my WIP account. Does everyone see that?
Yes.
Yep.
Okay. I'm going to save my invoice and close. Go in. I want to send it over to QuickBooks. Okay. I'm just going to worry about the one I did, which is right here. And I think everyone knows that you can drop down here and it's telling you where it's going, which account, which I think is so cool. So I've highlighted my invoice. I'm going to send it over. I'm going to click on that. Okay. It's gone. Okay, so what did I just do? When I pull up my QuickBooks, this is just the way that I always go into accounts. It's booked my HAN invoice so I can pay it in my accounts payable, and it's also put it in my WIP account. Does everyone see that?
Yes.
Yep.
So if I open this account, if you're used to looking at it in a journal entry form, here it is in my WIP account.
Okay.
Okay? Now, going back to eManage, I'm going to basically refresh my backlog. And here's my amount. Okay, it didn't save this because I forgot to save my grid after I renamed it. And you don't have to rename it. So here's my 4674. I'm going to make this smaller. Okay, and here's my WIP here's my account balance. Now, mind you, if you have separate WIP accounts, which most of you will, I would set up a header account so I could total my WIP account so you don't have to sit here and add up your 3 or 4 WIP accounts. And you could just look at your chart of accounts real easy and see the total balance in WIP. And I can help you do that if you don't know what I'm talking about. But my point here is that, I mean, this is like invaluable.
Hey, Chris.
Just being able to reconcile what I have in WIP in eManage. So I don't really even look in QuickBooks.
Hey, Chris.
Yep.
You're talking about making a header account and then sub-accounts, right?
Right.
So that you can look at the one account and have the sum. So if everybody knows it's a sub-account. Okay?
Right.
Right.
So the purpose of this is that I'm not always freaking out about trying to reconcile my books or do my month end. I have my ongoing WIP in eManage at all times. It's going to show me. Okay? So I have my total commissionable income, and I also have what I've already entered as far as invoices against that job. Okay? So now, so I've got the invoice. The invoice date I made today. Okay. There's been a delay on this job. They're waiting for fire marshal permits. I don't know what they're waiting for, but obviously there's been a delay, and we pushed installation to March 15th. Okay. So March 15th comes. I can finally invoice it.
Hey, Chris.
Yep.
Chris. You want to put more, put some more WIP against some different accounts before
Sure.
you do that, and let's show how it goes and does multiple WIP accounts at the same time.
Okay, so I'm just going to go and put this. This is my installer. So I want, ooh, I didn't refresh this for my installation.
It's right
Oh, there it is. No,
Right up there.
I need new glasses. That's what it is. Okay, so I put that in my install WIP. I'll do this one into software, even though we don't really buy software as furniture dealerships, but buy it.
Okay, so you're going to need to send those over to QuickBooks before they'll show up as WIP in
Right. When you go to do your invoice, if the WIP's not showing, you've got to send it over to QuickBooks first, which makes sense. Okay. So now my WIP is 53. That's accounts payable. But if you move the chart of accounts over, you'll see it. A bit more. Okay, so there's my 3 WIP accounts. So obviously if I added them up on the calculator.
or if you guys make one main account and 3 sub-account or however many sub-accounts for your WIP, it'll all add together from one account.
Right. Is everyone with us?
Yep.
Yeah.
Okay, so technically all we've done is enter AP invoices. I mean, that is all we've done here is just enter 3 AP invoices, okay? They were all dated in February. So this job we're not installing till July. So I want to go ahead and do a new invoice. I'm going to do it 100%, Philip, and then I can go back and do the percentage just to show them how it works.
Okay, that's fine. I want you guys to notice that because you used WIP accounts on your payables and sent them to QuickBooks, this checkbox checked itself automatically, and it's done all the calculations for you right here. If you change your percent of the balance or percent of the order here, it's going to recalculate how much it's going to apply to each of these accounts. But it does it automatically. You don't even have to think about it. It just does it for you. As soon as you make an invoice, if you have WIP accounts on your payables and they have a corresponding offsetting POGS account, this happens automatically. Go ahead, Chris. Sorry.
So this is what I was doing manually before I talked to Philip about it. I was going in and looking, and what I would do is I told my helper who helps me out with things, I said, okay, what you're going to need to do when you do an invoice, you know, it's really not that hard, but pull up your acknowledgments and costing so you can say, okay, I booked this, I got to take that out, I booked this, I got that out. So when I talked to Philip and told him what I was doing, he was like, no, you're not going to have to do that anymore. It's going to be all automatic. And I was like, I mean, I just, you know, I've sold software for years and years and years, but I just can't imagine that software can do that. So I wouldn't have even asked him to do that because I would never think software could do that, but it does. So it's just amazing to me, but that's that. So what's missing here, which looks kind of weird, is obviously we didn't have income accounts set up. So this should be, in a normal world, this should have the revenue accounts first, you know, booking my revenue and my install and my sales tax, and then the WIP and the COGS would obviously be at the bottom of the journal entries. When most of you go to invoice, do you have most of your parts assigned to income accounts so that it's doing it automatically for you?
I think so.
Okay, it should. If it's not, I can show you on another call. That's pretty simple to set up your revenue accounts to your parts. That's all based on parts. So it's looking at your bill of materials and knowing where to apply that.
This is Sean at McMurray Stern. I've got a quick question. I'm obviously relatively new to all this, but shouldn't we have, we've got corresponding WIP accounts with cost of sales accounts. Shouldn't we also have corresponding revenue accounts with the cost of sales accounts? So
well, that's what I was just saying. And if you're new, Sean, the way that eManage works as far as revenue goes is you can assign, now Philip's doing it manually here. So like I said, you would have the receivable entry before your COGS entry. But what happened is the parts we had in our bill of materials, we had not already linked them to our revenue accounts. It's very easy.
My question is you don't have an install revenue account, installation.
Yeah,
you know what, that's because I just set that installation account up this morning. We're a software company, we're not a furniture company, so we don't necessarily have all of the different accounts that are furniture, you know, it's just different.
Right, but you can pre-assign, if all of your installation parts should be pre-assigned to your installation revenue account, and this all breaks it out into the different accounts for you. You just pre-assign them. So
I get that, but you guys created a WIP account for install, cost of sales account for install, but you didn't create a revenue account for installation. That's all.
Right, but your accounts, you actually break this out here. So if I had, right, we don't have an installation sales account or installation sales account, but if we can break this out however we want to, or you do have that. And you would have your installation parts already assigned to your installation account. This would automate completely if we had put all these parts against accounts, but we didn't do that. We just imported this morning to have familiar things to show you.
Okay, fair enough.
But everyone out there, if you're coming into your customer invoices and having to manually assign your GL accounts, call into support, or you can call me, because that's definitely a function that you should not be doing manually. The accounts should be assigned to your parts, and actually they're assigned to your MFG codes, so that any new part that's imported into that MFG code, it'll automatically have your GL accounts assigned to it. So if you're coming into customer invoices right now and having to manually do journal entries, please, please, please call us. You should not be doing manual journal entries at all.
So I'm just showing that right now. Inside of the MFG codes, you can pre-assign the MFG codes to your QuickBooks accounts, and as your parts import, either from Configura or from a zip file or using Project Matrix, they will automatically assign to the account as they're imported. So if you set it up here, it's much easier. Okay. Otherwise, you have to manually go in and go to the View Part Listing window, and you have to assign the accounts there to all the things that haven't been assigned. But this is much easier place to do it. You can assign each MFG code to a QuickBooks account, an income and a tax account. Okay, and you can do it per division. If you have multiple divisions, you can set the income account per division, because if you have different divisions, you probably have separate QuickBooks files. So, okay, go ahead, Chris. Sorry.
That's okay. So what I was saying here, I just want to explain when I said that eManage literally doesn't discriminate on accounts. For all of you accountants out there who work in QuickBooks, you know that if you've ever tried to do an entry to a sales tax account or a payroll account, it'll say, you can't do that directly to this kind of account. So what amazed me so much in this system is that I'm in my receivable mode here. I'm not in a vendor entering a payable, right? But eManage doesn't care. It's not like, I mean, if this were QuickBooks, they'd say, oh, no, 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 you can only have revenue accounts here. Well, as long as in here, I tell eManage where I want the accounts. And that's what I was showing you here. The way that eManage has receivable account or payable account. I can have both. So there's no restrictions like we have over in QuickBooks. And that's how I'm able, whether it be payable or receivable. I mean, I could put a payable to a revenue account if I wanted. And if you set it up correctly, it'll work correctly. Obviously, if you had an intern in doing payables, you want them putting things to receivable accounts, but that's up to you to have it set up correctly in the beginning. The flexibility is there to accommodate us. So if we have it set up correctly, it's going to be going into the same account. So as you'll see, since I'm in the receivable revenue side of things doing my customer invoice, I can assign it to sales accounts as well as cost of goods account at the same time. And that's where the concept started. I've never been able to do that in any system I've ever worked in because it says, no, 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 that's an expense account. You can't do that. You're doing a customer invoice. And you're stuck. Where eManage has given us the flexibility that we can put it wherever we want. So what that's allowing us to do is book our customer invoice, book our revenue, and reconcile our WIP account, all in this one screen and this one transaction. So when we're going to send this customer invoice over to QuickBooks, and it's going to do just that. It's going to book our income, our sales tax, our cost of goods, and credit out our WIP. Done. Just by hitting the button to send that customer invoice over to QuickBooks. And from what I've heard on the phone, that has taken everyone probably, I don't know what, 3 or 4 days, people tell me. I mean, I talk to so many people that say, oh, you know, let's get on that next week because I have month end to do this week. And I don't know what that means or what they're doing, but if you're using this, and I don't know why you wouldn't, there's none of that month end going on.
Just one second, Chris. I've got to clear up my account stuff here.
Okay, does anyone have any questions so far of what we've gone through?
No.
One second, Chris.
Does it make sense?
Well, it definitely makes sense.
So the other point to this is that if you do progress billings, like I said, if you do progress billings and you get more costs in and you put it in WIP, it's gonna, Chris, go through the formula that we had to figure out. So Chris could do it on paper, and so if he could do it on paper, we could do it on the computer. So we ended up making it so that if you get more costs in and apply it to WIP on your second invoice, if you're doing another 30% of an invoice, then it will take the first invoice percent plus the second invoice percent times the entire WIP, and then back out what you've already done. So it's absolutely accurate to the penny, applying your WIP, and you don't have to do it manually. You don't have to calculate that out. Because Chris, when she was doing it, I mean, it was pretty complicated. So, but we automated that entire process. I can't send it to QuickBooks.
Why?
I don't know.
What is it saying?
It is. Okay, go ahead, talk.
Well, I didn't see what it said, so maybe there's an account that I set up that I didn't check off in eManage. Or it's not completely, did I not completely spread the amount over, go back into the invoice?
No, I did. I think I took care of that.
Well, let me see. Amount applied, the whole amount applied, 286. It might just take a while because it has so many entries.
No, it's not that. Anyway, go ahead.
Okay.
I'll figure this out while you're talking.
Okay. Well, I just, if anyone else has any questions, or the item list ID. The item list ID there. See?
Right.
Yep.
Yeah, I get that.
The 2 new accounts that I set up, so I did something. It was my error.
I should create them. All right. Does anyone have any questions while I'm looking at this? Anybody?
Does everyone see the time savings that this is going to help, I hope?
Oh, yeah.
Is anybody out there spending a long time doing that kind of stuff
Yeah.
every month?
Yeah.
Yes. Yes, I'm down to 3 days with this new way instead of 7.
What is it still taking you 3 days to do?
Well, you know my whole other spreadsheet that I have, so but we won't go into that. So.
Okay. I'm hoping you're not going to do that big spreadsheet after this, but if there's other things that, outside of this, then I guess it can't be helped.
Yeah, it's something outside of, it can't be helped. But I, instead of pushing everything over to QuickBooks, coming up with the right number, and then entering it back into WIP, and then coming up with your number, and then making your adjustment back to cost of goods sold, I mean, this is leaps and bounds so much easier and quicker.
Right. And Chris, why don't you talk about the online stuff, the online banking stuff, because I don't think a lot of people are doing that while I'm going through this.
Are there people, I know Yolanda's not doing it, poor thing.
Thanks, Chris.
Trust me, I'm not going to tell you how old I am, but I'm not some whippersnapper right out of college who does everything online. And, believe me, years ago, I kind of had a bookkeeping service where I did a lot of different clients, and I did manual payrolls for probably 25 different companies. Payroll taxes, everything. It was, and back then it was just kind of like, that's just what I did. It was fine, and had my week, a quarter that I did taxes and that type of thing. We all have, you had our dot matrix printer printing our checks so that we have a carbon copy, and I used to do that, and it took me, and I've heard this from all of you, I can't talk to you today because I have to do a check run. Because a check run can take 3/4 of your day, and then you have interruptions and other things to do, so it can even spread over 2 days. And then putting them on someone's desk to be signed, getting them in the envelopes, putting stamps on them, putting them in the mail, and it's just I don't know, it just scares me even thinking that I did that for so many years.
Antiquated.
The majority of larger banks out there, and I know I've talked to some of you, and you deal with mom and pop little bank because they give, for lending purposes, there's nothing we can do about that. But the majority of larger banks integrate with QuickBooks. Some of them only have the capability to download, the smaller mom and pop banks only have the ability to download transactions into QuickBooks. Well, that does not help you at all because it's just not helping you. I mean, big deal, you're downloading transactions. And the reason why the mom and pop banks, you can tell that I've researched this a lot, don't have the flexibility of the bill pay is because it costs them. Intuit charges the banks, it's a pretty hefty fee, either monthly or annually, to have the ability to offer their customers. I know that myself personally and business-wise, I pay an unfathomable amount of interest to banks every month. So I really think that they can afford to pay the Intuit fee to have that flexibility for me. And I would never deal with a bank that doesn't have it just because it's just, like I said, it's thousands of dollars of my time and money a year So what the bill pay will do, and like I said, there's probably people out there that will never pay their bills online because hackers and whatever else is out there. I've been doing it for, I don't know, probably 4 or 5 years now. And I have the CEO look over everything, approve what's to be paid, and I literally press a button and the payments are made and in my check register, and I am done. I was in the Dominican Republic 2 weeks ago, and I was paying payables in the morning before I went to the beach. It's just awesome. And what that does, instead of the bank downloading transactions, it actually creates the transactions. So when I download my transactions, it finds the bills because I've paid them online. It's not a matter of downloading them and then having to enter. That's double entry. So I can't stress enough how much time and money it saved. The other thing is that most of the larger banks will be able to set your manufacturers up so that the payment is electronic. Smaller companies, the bank is simply mailing a check to that company for you on your behalf. So you're processing the payment to the bank's cutting a check, and they're sending it, and that can take 4 or 5 business days, whatever. But for larger companies, I know Han's on it, OFS, Trendway, Technion. I'm not, most of the larger companies have the capability to have electronic payments. So what that did is my manufacturers are getting paid within 2 business days, and I'm not paying a wire charge. I don't pay any charge for this service from a new bank that I went to because they wanted our business, saw the value, and the other banks might charge you $9.95 a month or something like that to have the bill pay service. But when I thought of 50 to 60 payables that I'm sending out, I think checks are now, I think they're 49 cents now. Or I'm sorry, checks, stamps are 49 cents. The postage alone was costing 3 or 4 times what that $9.95 a month was. And that's before I get into ordering $150 for, 500 checks, pre-printed checks, and again, my time. So anyone that's not on it, A, I feel very sorry for you. B, I would be happy to work with you, and like I said, I'm sure that 98% of you are with a bank that has that capability. So
it looks
it's
like
pretty
you guys.
invaluable.
It looks like they this new integration has a couple different changes in it, so that's why it's not going out today. It's going out later this week. So anyway, obviously when it pushes over into the different accounts and zeroes out your WIP and puts it into COGS and does all that. And this will be working properly when it goes out. All right.
I don't know. The version I'm on works now, so I'm not sure.
Yeah, no, it's brand new integration files, and it looks like they made quite a big change in here. So.
Okay. So when that entry went over, it would credit out your WIP account, it would debit your cost of goods sold, and then obviously book your revenue accounts as it's already been doing. And like I said, if you're nervous about the whole reconciliation process and making sure that your WIP is up to date, literally at month end, on February 28th, I can go into my backlog, and that WIP number in that actual cost column, unless you change the name of it, will equal my WIP on my balance sheet. So I'm totally confident and comfortable, and
Yeah.
It took me a week to trust it. I'm just like everybody else out there. I kept looking at it every day. I'd look at it, and I'd call Philip, and I'd say, the number matches. It still matches.
There's a caveat to that, Chris. The caveat is if you actually do progress billings, then your WIP account is going to be less than your actual PO cost. Okay? It takes partial WIP and not the whole thing. You understand?
Right.
That's not always going to be true. If you're a company that does progress billings, that number will not match. You guys got to know that. So.
Yeah.
Are there any other questions for Chris? Because I wanted to go through just a couple other things that I sent out in the email yesterday and just show you what's happening with them. Any other questions for Chris about this?
Nope.
Good job.
Oh, thanks. Yeah, if I can get this new integration to do what I want. Okay, so look, on your guys', this is pretty cool, and I know you guys are all going to love this. On configure user settings here, when you get this new update, what it's going to look like is there's going to be a toolbar at the bottom. Okay, so this, and this checkbox right here, always show the quick search toolbar. So now you guys see there's a new toolbar on the bottom of my screen. Okay, when you first get this update, everybody's set to see this automatically. Okay, if you have resolution that's not that great on your monitor, you're going to want to go in here and hide this toolbar. But you'll want to notice that Control F2 does an opportunity search. Control F1 does an order search. Control F3 does a service ticket search. And I know you're wondering why I put them in this order and the control keys are different. We did it basically in the order of how much people use it. So Control F1, most people in your company, or a greater number of people in your company, are going to do searches for orders. Okay? The cool thing about this is if you do Control F1, it puts you right in the box, and it's actually loaded every single order that is either not completed or was completed in the last year. Okay? Now, if you look at all this information in here, we've got the bill to address, the bill to phone number, the end user address, the end user name, the end user phone number. We've got the customer PO number. We've got everything that you could want to search, project name, order name. So if you just search any part of this, let's say 908, 905, how about that? So 905 is actually part of this person's phone number, okay, 905-726. So then I can just click that and hit enter. It opens up the order, okay? So the order has more criteria that you can look through than opportunities. Opportunities don't have a bill to. So this just has the end user address, and the phone number, okay? And also salesperson. So if I wanted to look just up a salesperson, I can just type the person's name. And now I've filtered the list by the salesperson. I'm looking at all of their opportunities. And I can click on one and hit enter. Okay? Service ticket search has the service ticket number, the service ticket type, the end user address, the bill to name, the address, and the phone numbers for each. If they're different. If they're the same, it only puts it in there once. Okay? If you're hiding this toolbar, here, okay, if you already know Control F1, Control F2, and Control F3, you can hide that toolbar and you just hit Control F1. It brings up the toolbar and you start typing. And then you hit enter. And then it closes back down so you're not taking up all your screen real estate. Okay? So that's one thing. The other thing is there's this new batch entry menu. Okay, so what we put in here is a couple new things here that are journal costs and credit card charges. Okay, so journal costs are things that you can either put a cost against a job in eManage only, okay, and without a purchase order. So if I go here and I put the orders, it works exactly like that order search that I just showed you. So I put it in here 905, and then I hit enter. It's going to show me any journal costs that I've already put in against that customer. A transaction date. If I want this to go to QuickBooks as a journal entry, I choose my QB credit account and my QB debit account. Okay? And this shows you every account that you use in eManage. So as long as it's checked off use in eManage, you can use it. And your debit account right here. Now, this doesn't have to be assigned to anything. It can just be a journal entry for QuickBooks. So if I only assign the credit and the debit account and not an order, not a service ticket, then it will just send over to QuickBooks as a journal entry with no job. You put in your amount. I'm going to do this without QuickBooks, so I'm going to put in $200. Okay, and I can put a note. I can tell it whether it's commissionable cost or not. Okay, and I save that. And that becomes, and I'm sorry, journal category is a new drop-down in your drop-down list. So as soon as you get this update, you'll want to go and fill out your journal categories. Okay, journal cost categories is what it is in the administrator. So it's a new drop-down. You do whatever you want with it. I go into that job now, that's job 628, and I go to the final profit. We have a new thing here called journal cost, okay? And it adds into your total cost, okay? And you'll also see a listing of all of your journal costs here, okay? So everything that you create as a journal cost, meaning that you don't have a purchase order, it's not a payable, and you didn't type in actual cost, you've actually given it a type and an amount. Because we made this commissionable, it will also be part of your commissionable cost. Okay, so it'll add into your commissionable costs on that. Okay, but you'll see the details here, everything like that. The other is your credit card charges. Okay, this is a function in QuickBooks to do credit card charges. So we have the vendor, okay, and then we have our credit card. This is a credit card from QuickBooks. So you have to say use and e-manage on your credit card account. Okay, a reference number, a transaction date, and transaction amount. Okay. If I do this, I'm then adding my details here. If I assign it to an order, this credit card charge is also going to create a batch journal cost. Okay. So if I assign this to order number 265, or I'm sorry, 905, that was 628, okay, and I give it an account, and it's going to do $100, because that's what I said. If I add this, okay, and then I go back to my journal thing, now you see it actually made another journal cost for me because I assigned it to a job. Credit card charge entries are only for pushing over to QuickBooks, but when you assign to a job, it creates this for you, this batch entry for you. Okay, and then it will send over to QuickBooks in the QuickBooks integration for your credit card charges, and again, if you wanted to do some journal entries just in here. Okay, so
that'll be
any questions about that?
I like it.
Oh, good. Thank you. Who said that?
Jen.
Oh, hi, Jen. So you see, you're going to do credit card charges, and then you're going to actually assign them to the details to jobs and some not jobs, right? Because you're going to do the whole. You're going to do the whole credit
on the batch journal.
Right. That's right.
Great.
Okay, and it'll show up as a cost. It's commissionable or non-commissionable right here. Okay, and it'll apply to the, and you don't care about commissionable, sorry.
Yeah, that's okay. No, that's great. Looks great.
Question?
Yes, absolutely.
Now, if I'm in a job already, am I going to be able to do the right click, go to batch entry, and do a journal entry?
No, you can only do journal entries from here.
Okay.
So, but you've got this nice little search thing, and Jen, also, you can assign things to opportunities, but you can't send them to QuickBooks unless they're orders.
Okay.
Okay.
That's fine. Yeah. Great.
You can only do these journal costs from the batch entry window.
Okay.
Okay. But also,
if I don't want to send it to QuickBooks, is there a
you just don't fill in the QB.
You just don't assign these accounts. That's all I did.
Okay. I'm sorry. Yep. Thank you.
No problem. But also, you guys, I also did this. When you go into this, the order, the order should be here. This project order ID. Okay, so you know, Jen, we were talking about being able to put lunches and stuff against projects, right?
Right.
So they wouldn't have an order ID, but they would still show up in here in the final profit, right?
Right.
What I did is I made this a drop-down with all of your orders so that if the job turns into an order, you can assign that to the order as a cost.
Oh, okay. Okay.
Would be blank if you assigned it to an opportunity, but then you can assign it to an order on the fly inside of the final profit window.
Okay, great. Thank you.
All right, any questions about that?
No.
Just remember, batch journal costing is basically a way for you to do anything you want to do. No vendor, no purchase order, just putting costs against a job. If you wanted to go to QuickBooks, you have to assign the two accounts here, the credit and the debit account. Okay? On the credit card thing, if you put in $1,000 for your charge, oh, and by the way, pending credit card charges here is a grid of all the things you've recorded but haven't sent to QuickBooks yet. So you can double click on one of these and you can add to it before you send it over. Okay, so until you send it to QuickBooks, it's a pending. Okay? Yeah. If I change this to $200 for my transaction amount, you see I've got $100 left because it recognizes that I've already accounted for $100. This works just like the credit card entry in QuickBooks. Okay? It's designed exactly the same. If you look at the QuickBooks screen, it looks very similar to this. Okay? And you can also do refunds here. So if you get a refund from on your credit card, you can apply that here as well.
So in theory, I could go into QuickBooks, download all my credit card stuff, pull a report with the charges that just need to be going to the job or project, and put it in.
And you would batch journal entry. You would have to put them in batch.
Okay.
This is for entering all of the stuff. So this is a job or not. This is basically doing what you would download.
Right.
Okay.
So I can do it either way.
If it's easier for you to download, then download because that's automatic. And then just do the job stuff in your journal costing.
Okay.
Right?
That seems really easy. Yeah, thank you.
And then just don't assign this.
Right.
Okay? This is what over to QuickBooks as a journal entry.
Okay.
Okay. Any questions about that, you guys? Anybody else? Okay, I'll let you guys know when the update's ready, and I'll also be sending you a link to install the new QuickBooks integration files so that you can actually use it.
Now, Philip, when you send us the link for the integration files, will I have to do that on each computer?
Only computers that you're using the QuickBooks integration on.
Okay. Yeah, that's what I meant, but okay.
Yes, each computer. And what we'll hook it back. We'll hook it into this. So inside, you can actually use eManage, and you could even open up the QuickBooks integration window. You just couldn't send anything. Okay.
Right.
So
okay.
If you look on Configure User Settings, we're going to change this link right here to install the QuickBooks integration. We're going to change that to the new integration file, so you can do it right from within eManage.
Okay.
Okay. Any questions?
Nope.
All right. Okay, I'm going to go ahead and actually I'll just give a minute more if anyone wants, and then I'll end the meeting, and I'll upload this recorded video for you guys and send you a link.
Great. Thank you, Philip. I'm going to go.
Thanks. Thank you, Philip.
Who is that?
Ann and Sean.
Oh, okay. You're welcome.
All right.